Most traders are about to get this completely wrong. SPY just closed the week at 634, the low of the week, with aggressive selling straight into the close. No buyers, no bounce. And this is exactly where people start calling a bottom, right before the next move hits. So the real question is this the support, or is this just a setup for another leg down? Because if you watch my last video, I told you we could push higher early in the week and then roll over. So what does that tell me? There's really not a lot holding price down here, which means a push higher, especially early in the week, is very possible. And that's exactly what happened. We rallied almost 4% of the lows, and then sold off hard, straight through 660 to 645, down to 634. That wasn't random. That move was driven by positioning. The market literally moved between levels where big money was already set. And now, the options market is giving even clearer signals about what's coming next. And this next move, it's the kind that traps traders on the wrong side, especially in a shortened week like this, where everything starts moving much earlier than usual. Before we get into what's next, let's quickly go over what actually happened this week, because this is important. In the last video, I said the options market was pointing to a move higher early in the week, and then a move back down that would trap traders into thinking the bottom was already in. And that's exactly what SPY did. We pushed up to around 660 right at the start of the week, and then rolled over. By Friday, 645 broke, and we closed all the way down at 634. That's not random price action. That's the market moving exactly between key positioning levels. Now, it wasn't just SPY. I also talked about Micron on the bearish side. I said Wall Street was starting to put this stock on a diet, and the options market was showing a very clear put wall at 380. Price got pulled right into that level, and once it broke, the move accelerated fast, all the way down to 344, before closing at 357. Same idea, positioning first, price follows. On the bullish side, I mentioned JP Morgan. I was watching 285 as support, confluence of the 38.2 Fibonacci level, and strong positioning with the call wall up at 300. And early in the week, the stock pushed all the way up to 298 before rolling over with the rest of the market. And then there's Broadcom. I pointed out the 300 put wall and the idea of a step down move between multiple lower levels. The stock dropped from 325 and finished the week sitting right at 300, level to level, exactly as expected. So across the board, this wasn't luck. This was positioning driven price. So now let's talk about what actually matters. What happens next? Starting with Monday. For the first expiration of the week, I'm seeing a clear stair-step of put walls at 630, 620, 615. And when you combine that with the fact that SPY closed at the lows, this opens the door for a gap down at the open, potentially straight into that 620, 615 area. But the more interesting story is what happens after that, because when you look at the rest of the week, that's where things get really aggressive. And I've said this before, when you have that many puts in the system, there's a very strong incentive for those options to expire worthless. Now, at the same time, we are still in a negative gamma environment, so moves can be fast, and risk management matters here. Wednesday, positioning is a bit lighter. Put was stepping down toward 615. But then going into the weekly expiration, which is Thursday this time, we're again seeing heavy positioning. Around 120,000 contracts at 640 and another major level at 625. So what does all of this tell me? It tells me the market could open lower on Monday, maybe even push into that 620, 615 zone, and then spend the rest of the week pushing back higher. Not a huge rally, but enough of a move to pressure all of those puts and push them out of the money into expiration. And here's the key point. That move higher, if it happens, will probably get blame on a headline. A Trump tweet, an economic release, something like that. But the reason doesn't actually matter, because the positioning is already there. And that's the difference between reacting to news and understanding what's already priced into the market. One trader chases headlines, the other one is already prepared for the move. If the market does stabilize, or we get that bounce scenario, there are two names I'm watching on the long side. First one is Carvana. The stock is holding that 290 to 300 area for now. And if the market starts showing signs of strength, this one is a strong candidate for a push higher. Looking at the options for this week, we've got core walls at 290 and more importantly at 330. So if momentum comes in, this could move from around 300 up toward that 330 level. But again, this is conditional. If the market loses support and rolls over, this setup is off the table. Second name is ADBE. The stock is trading around 234, which is already at historically low levels. Now, in the weekly expiration, positioning is relatively light. But when you shift to the next monthly expiration, you start seeing a different picture. Core walls building at 260, 300, even 320. So this is not necessarily an immediate move, but definitely one to have on the radar if the market starts recovering. And because of that longer-term positioning, this might actually make more sense as a stock position, not short-term calls, especially with the potential upside here being close to 30%. But again, same rule applies. We are still in a negative gamma environment. So if the market continues lower, those bullish setups are paused. Now on the bearish side, if the market keeps breaking down, there are two names that stand out. First is Broadcom. I talked about this one last week, and the move started, but it hasn't fully played out yet. For this week's expiration, we're still seeing that same put wall at 287.5. And now there's another major level building at 265. So if the stock loses that 290 area, there's a clear path for a fast move down to 265. Same logic. Positioning creates the path. Second is Tesla. The stock is currently trading around 362. And in the options market, there's a very clear signal pointing to 320 area in the near term. We already see a put wall at 320 for the Monday expiration. And remember, Tesla has multiple expiration during the week. But what's really interesting is the weekly positioning. There's not much standing in the way, just moderated put wall stepping down to 310, which suggests something important. If this starts moving lower, there's very little resistance from positioning. That opens the door for a clean, fast move down, especially in a name like Tesla, where retail tends to get trapped on the wrong side. So to wrap this up, we're still in a negative gamma environment, which means one thing: door is always open for aggressive downside and fast, emotional moves in the market. But at the same time, this is one of the best environments for active traders, because those sharp moves lower are usually followed by sharp moves back up. And that gives you opportunity on both sides of the market, long and short, but only if you actually know what you're doing. And that's exactly why reading the options market matters, because today the game has changed. We have major stocks with multiple expirations every single week and SPY with daily expirations, which means positioning is constantly shifting and new opportunities are being created every single day, especially with the VIX above 30. This is where real traders make their money, not by reacting to headlines, but by understanding positioning. So my advice for this week is simple. Stay aware that we are still in a corrective market. Track changes in the options flow daily. Take advantage of those intraday moves. And most importantly, take profits. Because in this environment, profits can come fast and disappear even faster. From my side, I'll be posting shorts throughout the week, whenever I see new setups forming, so you can stay one step ahead of the market. If this helped you, make sure you subscribe. And I'll see you in the next update. Stay sharp, trade smart, and let's have a profitable week.